Wall Street getting hammered Wednesday afternoon. We got the Dow losing about 500 points, the Russell 2000 falling below a key technical level. Here to make sense of all this, Ross Gerber. He's CEO of Gerber Kawasaki, and he joins us from his office in Santa Monica, California via Skype. Well, Ross, you got the S&P 500 down for a fifth straight day, the Russell 2000 falling below the 200-day moving average. Markets at an inflection point here, or is this par for the course being October?
Yeah, it's kind of par for October. It feels like October, but with rates, spiking to 3.25, which is actually where we think rates should be. The markets have to digest this move on interest rates. It's a new paradigm for the stock market and real estate markets, which have been used to even sub 2% rates for quite some time. So, as we move into a new normal of what, used to be the old normal, I guess, the stock market will have to take these adjustment periods as we sort of take the staircase higher with rates and the pullback in stocks. We look at it as an opportunity to add to our favorite names before earnings.
Okay, I'll ask you about the opportunity in a sec, but since you said it's the new normal of the old normal, as you
Yeah.
put it, at what level would the Treasury rates cause you to change your mind about the bull market that we're still in? It's 3.23% today for the benchmark.
Right, like it would have to go substantially higher for us to be concerned, like closer to the 4% rate. So I think if we were there, I think we'd potentially be seeing a recession in the US within a year because of the fact that the real estate market is already pulling back, and we're seeing a lot of effects from tax reform and higher rates hitting the real estate market, which is a big driver of the economy right now. So we expect this slowdown to begin now from rates. And so if rates, go substantially higher from here, that would be something to be concerned about. But I think we still have a long way to go to be concerned.
All right. The market's where it is right now. Do you see it as oversold, due for a rebound, or are we still in for some more downside?
Well, I think the market's fairly valued in here. I mean, we had a nice run through the summer. We're going to set up, I think, for a very nice Christmas season. So, I think this is pretty par for the course. A lot of investors really don't understand what's happening right now because they only see the U.S. stock market, and they don't understand that there's been a huge amount of damage in the bond market and in the foreign markets because of the trade wars. So overall portfolios for most people in America are not up on the year, even though U.S. stocks are up on the year, because diversification in any other asset other than U.S. stocks has had a negative return this year. So it's been a lot tougher time for investors than I think a lot of people realize. But just the same, after last year's phenomenal run, this isn't abnormal.
All right. You mentioned opportunities before. What do you see as opportunities for investors with stocks at these levels or other assets?
Well, I think for safer investors, Disney is one of the greatest opportunities I see over the next 2 years. With the merger with Fox and the way the Sky deal worked out, creating less leverage in the deal than originally thought. Now Disney's integrating all of Fox's businesses and reorganizing the company and setting up for a streaming future. And with the success they've had with the ESPN streaming app, we expect them to have huge success with their other traditional movie apps that are coming out hopefully in the next 12 months or less. So Disney has a low valuation, just phenomenal management, and it's a wonderful position, I think, for investors over the long term. And as well, I would argue for high-risk investors, Tesla, has been kind of pounded recently. Elon's created a lot of his own problems, but I think for higher risk investors, the reward is definitely there if Tesla continues to execute like they have over the next 6 months. So we expect that these are pretty big bumps they're dealing with in the road, but that's oftentimes the best time to invest. But we think now with the stock below 300, it's an opportunity for long-term higher risk investors as well.
Since you mentioned Fox in your answer about Disney and you mentioned Tesla, let's unite the two together. James Murdoch said to be the favorite, according to the FT, to replace Elon Musk as chairman of Tesla. What do you think about that if he were to be named?
Well, I think James is the best choice among the current board members. And I think he actually is potentially a good chairman of the board. So I don't want to be negative about it, but I wanted them to bring in an outsider. I think they're having trouble doing that. That will fill the needs of Tesla and the understandings of the business. But I would love to see an outsider be an independent chairman, Tesla. I think the company will only be stronger from it. Just the same, I think James Murdoch is a compelling choice, and especially compared to the other directors.
All right, I'll have to leave it there. Thanks a lot, Ross, for your thoughts and your picks.
Yeah, thanks for having me, Fred.
All right, our thanks to Ross Gerber of Gerber Kawasaki joining us from Santa Monica via Skype. I'm Fred Katayama, and this is Reuters.